everybody. My name is Allison Ostrander, and I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to discuss the compound butterfly strategy. Now, this is a strategy I did quite a bit last year. For those of you who have been following along with me for a while, y'all know how successful this strategy was last year in playing the crazy ranges that we had both down and randomly to the upside. And this year, I've kind of put it back on the back burner. It was a tool that worked out great last year, and then I put it back in my toolbox when it looked like it wasn't being as effective and that volatility was starting to come out of the market some. But more recently, between things that have happened with SVB, right, as well as what we've seen just from a technical side in the last few trading days, we've seen a pickup in those daily ranges. For a good chunk of this year, I would argue that the daily ranges have been closer to around 50 points on average, sometimes below that, like here at 28 points, sometimes slightly above 50, like here at 59 points. But they've certainly been well below the 100-point range that we got a lot of back in 2022. However, with the situation SVB happening more recently and what's happening with some of the financials and other symbols, we've started to see those daily ranges pick back up. On Thursday, we had a 109-point range. On Friday, we had an 87-point range. Today, we had a 96-point range. So they're certainly getting to that 100-point range that we've normally seen. On top of that, we have plenty of room on momentum to still continue to the downside, or if we start to get a reversal, right, for a move back up. And we also do have several news events this week that might be a little bit more focused on, like CPI and PPI with inflation. That could cause the market to swing a bit more like it did last year. And so I think this is a good week once again, or you might prep this for the Fed announcement later this month to consider a compound butterfly strategy. And in particular, the one that I used quite a bit of last year is the broken wing butterfly strategy, having one on the call side and one on the put side. This way, we don't necessarily have to be right about how the market will react to this news. All we have to do is be right about the potential volatility that we could see in the market. And sometimes when these news events happen, like back here, for example, you get an opportunity to take a profit not only on one side, like in this case on the put side of the trade, but you also have an opportunity to take a profit on the call side, which can make for a really fun strategy to trade in volatility. And so for this week, the anticipated range going into Friday's expiration is around 109 points. Like I mentioned, the daily ranges have been around 100 points already. So knowing that's the anticipated range for the week, knowing we have room on momentum, we're not at any exhaustion levels, and knowing the news that we have coming out, I think this could be a good strategy for this week, or certainly a good strategy to play through the Fed announcements later this month. So what I would look to do is go roughly 100 points out of the money on each side and look at a broken wing butterfly. For example, roughly 100 to 110 points higher from here is around 39.65-ish. Depending on what spread width you want, right? You can always do what you think is best for your account and what's within your risk tolerance. But my personal favorite to keep risk low and still play it is something like a 15-10 point spread. The reason why is because if it starts to go in the money rather quickly, it can still allow for a very nice profit, but it still keeps that risk on the smaller side of things, with the spread width difference being only 5 points, with the debit spread being 15. The credit spread's 10 points. That's where that spread width difference of 5 comes into play. So right now on the call side for this week's expiration, with a pin of around 39.65 within the anticipated range, we're looking at about a $1.60 cost basis. Currently, that allows for a $13.40 profit potential, excellent risk versus reward. And then, of course, the benefit of doing this as a debit broken wing butterfly, where the debit spread's wider than the credit spread, is that if it goes completely in the money, then it still allows a forgiveness factor of that overall profit, meaning If we get volatility to really spike in one direction or another, it builds that forgiveness factor in to still allow you to take a profit on the trade. The reason I also like these strikes right now with where we closed out on Monday is because they're right up towards resistance levels on the daily chart. So if we go up, test resistance and start to stall, your strike should be at or in the money and should ideally still allow for a profit on the call side. But keep in mind, we don't know how the market's going to react to this news or if we might continue to sell off here. Certainly on my charts, they are leaning more bearish on the daily time frame. So that means we also want to look at a 1510 debit broken wing butterfly on the put side. So we want to go roughly 110 points out. That would make for a pin of around 37.45 currently. If we have 15 points on the debit spread, 10 points on the credit spread, that's about $1.20 cost basis right now. So in total for this trade, because keep in mind we have to take into consideration the risk on both sides. So let's say we get filled at the mark on the call side at $1.60 and a mark on the put side at $1.20. Our total risk on this trade is about $2.80. Certainly not a bad risk for this trade setup. Ideally, I personally, when my spread width difference is 5 points, like to keep the cost basis on this strategy under $3. The reason why is because let's say it completely falls apart, right? And we're down by 3,700 by the end of the week. Well, if that's the case, then we know that the put spread would cash settle for $5. $5 minus $2.80 of a cost basis for both the call and put butterfly means we walk away with a $2.20 profit potential. Not a bad risk versus reward. Of course, if we can get closer to the pin, which is within the anticipated range they're expecting for this week, then we have a max profit potential of $12.20. 15 points of the debit spread minus the $2.80 cost basis is a $12.20 max profit potential. Certainly an excellent risk versus reward. So if we do continue to pick up in the daily ranges like we have been, this is a tool from my toolbox that I might be pulling back out for this year and continuing to use to play this volatility and uncertainty in the market. Because remember, once again, I don't have to be right on if the market reacts positively to the news. I don't have to be right if the market reacts negatively to the news. The only thing I need to be right about on this strategy is that we do get some sort of volatility and we do move within the anticipated range for this week. So certainly something to consider this week. Or if you feel like you missed the boat this week, certainly something to consider whenever we get the news on if we're going to have a rate hike or not going into the end of the month. So thank you so much for joining me. I hope you guys have a great rest of your trading day. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.